Hello, everybody. Today at Texas Home Loans, we're going to talk about the big changes in mortgage insurance, how that affects you, and how a lower down payment might be a better use of your money due to these drastic changes. So, there's been some pretty large changes behind the scenes of mortgage insurance, which I noticed that people aren't really talking about. And one of the reasons they're talking about is it presents a risk. So I'm going to explain to you the tiering system that's now in place as opposed to the old system, and then why they're not advertising this. So the old system was a very simple system. There was either mortgage insurance or not mortgage insurance. And everybody who needed mortgage insurance, which was anybody less than 20% down, had to pay this monthly fee until it gets removed. With conventional, with FHA, it stays on if you do the 3.5% down forever, for 30 years. So you're looking at a situation where the mortgage insurance was very expensive. It was deemed as a bad thing. And at the time, it was a bad thing. The mortgage insurance companies got hurt really bad during the last crash. And I've noticed different pricing that came out. And I've also noticed incentives offered to me as a business owner that I don't take. And because of that, my mortgage insurance is much cheaper than other lenders. Sometimes it's 2 to 3 times as cheap. So, for example, if you buy a $500,000 home and you put 5% down with me, and you've got a 780 FICO score, the mortgage insurance is $63 a month. I mean, not free, but extremely low. That same mortgage insurance used to cost $209 per month. So what has happened is they've given better risk criteria to higher FICO people. Not all lenders will pass that on to the consumer. They use that as a profit added item. This is only what I'm assuming because I'm offered the same rates as anybody else, yet the rates are $150 for that scenario, or $200, $250 per month. And where is this extra money going? Because the insurance only costs $63. So maybe the other lenders will say, "Oh, we're not making this a profit item, and we're not gouging the consumer." But if you're making passively a couple $100 more per month, doesn't look good. Doesn't look good, folks. Price it out. My customers have been very shocked at how low the mortgage insurance is. I just don't add any fluff to it. I don't add any profit margins to it. That's the only difference between me and the other lenders. But that's one thing you really have to watch out for if you're doing less than that. Also, even if you have good credit and you've got 20% down, it's $63 a month. That saving that 15% in your pocket, that's $75,000 in a $500,000 purchase. That $75,000 could make you a lot more in interest or investments than the $63 per month costs you. So it really opens up the possibilities. It's not that mortgage insurance has become good. It's becomes much more affordable. It's really become a matter of where to put your money, where's the return on your money. And so they've made it graduated. The pricing buckets are 660, 680, 700, 720, 740, 760, 780. And as your FICO scores go up, your mortgage insurance gets much more affordable because you're a lower risk. Just like any insurance, just like life insurance for young people is cheaper than older person. It's less risk to the insurer. So if you think about it like that, it's really worth it to get your credit scores up, do whatever you can, pay your things on time, pay your mortgage, not your mortgage, but your credit cards down. Your available balance hits your credit card FICO scores a huge amount. If you want some help with that, give me a call. I can walk you through the entire credit process. I can tell you the algorithms. It's a little bit tricky. TransUnion, Experian, and Equifax are a little bit not user-friendly because they're profit-driven. They're not there to help you. They're there to make money, and a lot of times it's to help creditors, not you. I can give you the information so you're armed to get the best credit scores, so you can get the lowest mortgage insurance and give you the best down payment options. Hopefully this helps explain the changes in mortgage insurance. It rewards those with the high FICO scores. And if you do have a very high FICO score, this could make it very affordable, and we can go through all the different scenarios. The 5% down, 10%, 15, and all the way down to 20. We compare the monthly payments and also the mortgage insurance payments and see what fits your purchase the best. Feel free to call us anytime, and hopefully this helps you out in your decision.